is Zangpo. Welcome to Bhutan e-learning project. This lesson is on journal, ledger and trial balance for Key Stage 5 classes 11 to 12. So in this lesson, we are going to learn on journal, ledger and trial balance. At the end of this lesson, learners should be able to fulfill the following objectives. 1. Journalize business transaction. 2. Post the journal to ledger accounts correctly. And third, prepare trial balance from ledger accounts. I repeat the objectives. The learners at the end of this lesson should be able to 1. Journalize business transaction. 2. Post the journal to ledger accounts correctly. 3. Prepare trial balance from ledger accounts. First, we'll talk on journal, a general journal. The general journal is the record of transactions or transactions that are recorded in a chronological order in a journal before they are transferred to the accounts. I repeat, the transactions are recorded in a chronological order in a journal before they are transferred to accounts. So where these transactions are recorded, it is called as general journal. So journal contributes to the recording process because it discloses the complete effect of a transaction. It provides a chronological record of a transaction and it helps to prevent or locate errors because the date, debit and credit amounts can be readily compared. I repeat, journal contributes to the recording process because it discloses the complete effect of a transaction, provides a chronological record of business transaction. It helps to prevent or locate errors because the debits and credit amounts can be readily compared. Let's have some business transaction. Mr. Dawa is a vegetable vendor at Centenary Farmers Market and has the following details. Purchases made on 25th March 2020. The items he purchased are potatoes 1000 kgs at 35 each, costing 35,000. Cabbage 500 units, 500 kgs of 50 Newton each, amounting to 25,000. Cauliflowers 500 kg, the rate is 55 and total amount is 27,500. He purchased beans of 500 kgs at 70 and then he paid 35,000. And then he also purchased green chilies of 500 kg and for every unit of chili he paid 100 Newton. For 1 kg he paid 100 Newton and total expenditure for buying chili is 50,000. Sold this one, he has sold all the vegetables and the sales records are given on the right hand side. The sales are made on 26th and 27th of March 2020. Potatoes are being sold at 55, cabbage at 200, cauliflower at 200, beans at 200 and green chili at 500 per kg. Then he also have some other expenses that he has incurred on 30th March 2020. He has paid rent of 4,500 Newton. He paid electricity bill of 600 and salary to his salesperson 800. So this is the summary of transaction of Mr. Dawa, a vegetable vendor in Centenary Farmers Market. Now we will use this transaction and then try to journalize this transaction first. How to pass journal entries for those transactions given here. In the first step, we will prepare journal entries for these transactions. So the journal entries will be recorded in the general journal book. In the general journal book, every page will have number. This is called as journal number, and here we have recorded these transactions in general journal, page number 1. So for the transaction on 25th March, when they have purchased, entry will be purchases account debit to cash account credit. I have added up all the purchases and which amounts to 172,500. So he has purchased vegetables worth a total of 172,500 and then he sold these vegetables in the market on the next date 26th March 2020, and he generated a revenue of 605,000. So cash inflow is 605,000 from the sales. Then he also had incurred some expenses. The expenses journal entry will be, all the expenses are clubbed together under head other expenses. So other expenses account debit, cash account credit. So he paid Newton 13,100 as other expenses. So entry for the transactions given in these slides are made in the general journal first, and then you can see on 25th March recorded in the books in the general journal as purchases account debit to cash Newton 172,500. Second journal entry is cash account debit to sales account credit Newton 605,000, and then we have expenses paid, other expenses account debit to cash account 13,100. So this is the journal entry for his transaction. If you look at the heading, it has LF. This is the ledger folio's number of the ledger folio page in which those purchases account, cash account, sales account and other expenses accounts are recorded. Now let's see how these journal entries are being transferred or posted into ledger accounts. Now what is ledger? The ledger is comprised of the entire group of accounts maintained by the company. So ledger is comprising, or it is made up of entire group of accounts that is maintained or recorded by a company. Example, see, in the companies we have assets, we have liabilities, we have shareholders equity, or we have capital. Under assets we have equipment ledger, land ledger, supply ledger, cash ledger. Under liability accounts we will have interest payable ledger, salaries and wages payable ledger, we will have accounts payable ledger, we will have notes payable ledger. Under shareholders equity accounts we will have salaries and wages and expenses, service revenue, dividends, retained earning and common stock, etc. These are some examples of ledger maintained by the business. Now going back to the journal entry that we have passed for the transactions of Mr. Dawa, let's see how this journal entry are now posted into ledger accounts. So this is the journal entry that we have entered in page number 1 in general journal book, and now from here it has to be transferred to the ledger account, Now ledger account is shown here. Here I am preparing only one ledger account. That ledger account is cash account. So wherever cash is there in the journal entry, I am going to post this in the cash account in the ledger account. So here the head of the ledger account is cash account. Now under this cash account, what are the transactions to be recorded? We have to bring from the journal entry. Now if you look at the cash which is in the journal entry, there are 3 cash involved. When you purchase, there is cash. When you have sold the vegetables, you again has cash, you have cash there, and you paid expenses, again cash is involved there. So this cash will be bought in the cash account. So first cash that you are going to record is purchases. Purchases account debit to cash account is the first journal entry. Now this entry has to be posted into ledger accounts. So in the ledger accounts, on the right hand side you will have purchases and you will have JF number, meaning journal folio number. So if you look at the purchases account in the general ledger, then you can see it is recorded in page number 1. It is recorded in page number 1. Purchases, other expenses and sales. All these 3 transactions are recorded in general journal page number 1. Therefore, in the JF number we have written as 111 for all the transactions. And on the credit side of the cash account, you can see purchases and other expenses. On the credit side of the cash account, you can see purchases and other expenses. Here the entry is passed or recorded or posted on the credit side because the cash account, if you look at the journal entry, the cash with these purchases is on the credit side, cash with the other expenses is on the credit side. If you go by accounting rule also, when you follow traditional approach, cash account is a real account, and then when the cash goes out, it is credited. If you follow modern approach, where cash is considered as asset, so when there is decrease in asset, it is credited. So likewise, following all these rules, we used to debit in the general ledger. We used to credit in the ledger account. If you look at the sales, entry, journal entry on 26th March 2020 in general journal, you can see cash account debit and sales account credit. So in the cash account, in the ledger account, sales account will be recorded on the debit side, and Nultrum will be 605,000, because you can see this sales account, when you sell vegetables, cash comes in. So there is increase in the cash in the business. So therefore, when there is increase in the cash in the business, it is debited. If you look at the journal entry, you can read it like this: purchases account debit to cash account. And then if you look at the ledger account, cash account is the name of the heading, name of the account, and the purchases is put on the credit side. So how we read this journal entry? We usually read it as anti-clockwise. So therefore, from the ledger account, you can read it as purchases account debit to cash account credit. Cash account debit to sales account credit. I repeat, we read this journal entry in the anti-clockwise method. Example, purchases account debit to cash. From the ledger account, you can read it like this: purchases account debit to cash, other expenses account debit to cash. From the ledger account, you can also read the sales entry as cash account debit to sales account. So this is how we do the posting from general journal to the ledger account. Now, student activity. I have just prepared only one ledger account, that is cash account. Now you complete the following table. It's given like this: complete the ledger given below following the steps we have learned. Now this is purchase account. How are you going to record, or how are you going to post the details of purchase account from the general journal to this purchase ledger account? Come on, try yourself once. You can use this journal entry here. You can use this journal entry, purchases account debit to cash, and then only one purchase account is here. So this purchase account has to be recorded now in the ledger account here. So what will be your answer, where you are going to record? So your answer should be on 25th March 2020, purchases account debit to cash. That means you have purchased some vegetables on 25th March, paying Nultrum 172,000. So cash account, purchases account debit to cash. So cash is recorded here, and this purchase account again shows a balance. That balance is debit balance. So purchase, if you look from the modern approach, this purchase account fall under expense account. So expenses usually or normally will have a debit balance. So this is how we post from general journal to ledger accounts. Now again, posting. What is posting? It is the transfer of information from the journal to ledger. So you have posted information from the general journal to the ledger account. When you were preparing cash account and purchases account, bringing the information from the general journal, that is called as posting. Now posting happens from journal to ledger. So debits in the journal are posted in the debit side of the ledger, and the credits in the journal are posted as credits in the ledger. So this is very simple. If you have debits on journal, post it on the debit side of the ledger. If you have credits on the journal, post it on the credit side of the ledger. Now we have finished preparing journal entry. We have finished posting these journal entries into ledger accounts. From that sequence, we jump to another step, one step ahead, to prepare and use trial balance. Now we are going to learn how to prepare trial balance. What is trial balance then? The trial balance is a summary of all account balances in the general ledger. So you have prepared ledger accounts like cash account and purchases account. Similarly, you are going to have many ledger accounts. All these ledger accounts balances has to be brought down or posted into the trial balance. Trial balance is an internal document. When the double entry process has been completed correctly, the total debits and the total credits in the trial balance are equal. That is always. When you have posted the ledger accounts, balances of ledger accounts to the trial balance, the debit balance and the credit balance in the trial balance should be always equal. I'll give you a set of ledger accounts. From this set of ledger accounts, we will try to prepare trial balance. We'll try to post these balances of ledger accounts into the trial balance and see if this information that we have learned, whatever we have learned, like debit is always equal to credit in trial balance. Let us try this one if this works or not. So you have first ledger account, cash account. You have a cash balance 6,200. Second ledger account is accounts receivable. You have a debit balance of 2,500. Third is prepaid insurance. You have debit balance of 2,400. Fourth one is equipment account. In equipment ledger account, you have 3,000 as debit balance. And fifth, you have marketing ban. The balance is 8,000. That is debit balance. Now we have bank loan. Bank loan is a liability. We have a credit balance of 9,000. Then we have accounts payable. Accounts payable is again a liability account. We have 700 as balance, credit balance. We have unearned revenue account where balance is 400. Again, this is credit balance. We have expense account. The expense balance is 7,800. So expenses normally will have debit balance. So it is again in this ledger account shown as debit balance 7,800. Then we have share capital account. So capital of the firm is 10,000. So 10,000 is a credit balance. We have dividends. Dividends paid by the firm 200. It's an expense. Expenses usually have debit balance. So debit balance 200. Then we have revenue account. Revenue 10,000. So 10,000 is revenue generated. So in the revenue we usually have credit balance. So here credit balance as 10,000. Now these are the different ledger accounts of one firm. From these ledger accounts, all the highlighted ones, the blue and the black highlighted items has to go to ledger accounts with respective account heads. Example, the ledger account for cash account is on page number 1. And for accounts receivable is on page number 2 in the ledger account. So all the yellow highlighted shows the ledger folio number, Now let's see how this is being transferred to our trial balance. Now let's prepare this trial balance. See, cash, serial number 1, cash. Cash, we have in trial balance, we have serial number, we have account name, we have ledger folio number, then amount to be debited and amount to be credited. So first item is cash. From the ledger account we can see cash, we have debit balance. Therefore, in the trial balance 6,200 is recorded on the debit side. And if you look at the revenue, you can see 10,000 as revenue on the credit balance in the ledger account. And now in the trial balance, if you look at the revenue, then you can see 10,000 on the credit side. Similarly, we have done for all other items. So all the yellow items, reflected yellow, shows the ledger number. And so in the trial balance, you can also put the ledger number, because if your balances do not tally, here the total is 30,100 each on debit and credit. Here it's balanced now. If accounts do not balance at this moment, then you have to go back into the respective account heads. Look at the page number. Example, marketing ban. If you want further more information about marketing ban, you can look in journal in ledger folio page number 5 and see the details of marketing ban. So this is how we do the posting. First we post account head, account name from the ledger account, and then in the third column we post the ledger folio number which is given in the ledger accounts, and then we have to, according to the rules of debit and credit, we have to debit and credit the account heads. Note, very important, debit means left, credit means right. Do not assume debit as decrease or minus, credit as increase or plus. I repeat, this is important note. Debit is left, credit is right. Do not assume debit as decrease or minus, credit as increase or plus. So debit must equal credit. Debit must equal credit. Then what if the debits are greater than credits? Now, if the debits are greater than credit, example here cash account is given, so cash balances, there are debit balance of 15,000. If you look at this account, study this account, cash account, so in the debit side we have 10,000 plus 8,000, total is 18,000. On the credit side we have 3,000. So we have excess of 15,000 on the cash account debit side. So how are you going to deal with this? We simply say this account will have debit balance. If the debits are greater than credits, we simply say the debits, this is a cash account, it's an asset account. Asset account normally will have debit balance. So we can tell if debits are greater than credits, it has a debit balance. Similarly, what if credits are greater than debits? Let's look at this bank loan account. You have on the debit side 10,000, on the credit side 8 plus 3 is 11,000. So on the credit side it's exceeds by 1,000. What are you going to tell? You can simply tell this account has a credit balance of nil term 1,000. This account has a credit balance of nil term 1,000. Now let us study the case below and prepare journal entry, ledger account and trial balance all at once. Let us study the case below and prepare journal entry, ledger accounts and trial balance. Mr. Tashi invested 100,000 and started a wholesale business for organic vegetables produced from Dagana. His shop is located in Thimphu, anticipating the huge percentage of population not practicing vegetable farming to be his targeted customer. However, he had purchased furniture worth 10,000 to be used in the shop in Thimphu. Then he purchased vegetables worth 50,000 from a group of farmers of Dujigang, Dagana Zongkak, making cash payment. He also went to Tashning village and purchased 700 kgs of green chilies at Nultam, 7,000 from Abdoji on credit. He sold all the vegetables at Nultam 100,000. He paid 7,500 as salary to his salesperson, and the rent for the month were outstanding, equals to Nultam 13,000. So this is the business scenario for us. Mr. Tashi is doing wholesale business for organic vegetables. Look, Mr. Tashi invested 100,000. He purchased furniture worth 10,000. He purchased vegetables worth 50,000 on cash, and he purchased 700 kgs of green chili on credit, and he sold all this item at Newton 100,000. Then he paid 7,500 as salary, and the rent were outstanding for one month, Newton 13,000. So this is the case for us. Now for this case, we are going to first prepare journal entry, then ledger account, and then finally we are going to prepare trial balance. Journal entry in the books of Tashi vegetable shop. So in the journal entry we have accounts, we have debit, we have credit. So first entry is cash account debit, capital account credit. So in the respective column, the amount has been recorded. Second entry for purchasing furniture, furniture account is debited and cash account is credited. So in respective column, we write the amounts. Then third one, purchases account debit, cash account credit. He purchased vegetable by paying cash, so cash is going out. Purchases is expenses, expenses are increased. When increase in expenses are debited. Cash is an asset account. When there is decrease in asset, it is credited. See how we have applied the rules of debit and credit. We can use either traditional or modern approach in identifying debit and credit item. The fourth transaction is purchases account debit to Abdoji's account credit. Here we have purchased 7,000 words chili from Abdoji on credit. See, Abdoji is on credit side because he has now become the creditors of the firm. Mr. Tashi has to give him 7,000 on a later date. See, liabilities are always credited. Normal balances of liabilities are credited. Then fifth transaction is cash account debit to sales account. So sales account is a revenue account. When there is increase in revenue, it is credited. See, sales account is recorded on the credit side. Cash account, here when you sell vegetables, cash comes in, cash is asset. When there is increase in asset, it is debited. Sixth transaction, salary account debit to cash account. Then you have rent account debit to rent outstanding account. You'll term 13,000. So this is the journal entry for the Tashi vegetable shop, and then from this journal entry all the accounts has to be transferred to ledger accounts. Look at the yellow highlighted part. It is all about cash. How is cash getting recorded on debit and credit side? When you sell something and when the cash comes in, when cash increases, it is recorded on the debit side. When cash goes out, cash is decreasing, right? Asset is decreasing. When the asset decreases, it is recorded on the credit side. So this cash alone will give you clear picture on how accounts are debited and credited by applying the rules. You can apply either of these two rules, three golden rules or 5 diamond rules. Now see, this is first ledger account prepared. Ledger account, this ledger account is cash account. So first ledger account is cash account. All the transaction related, all the journal entry related to cash will be recorded in this account. See, capital, sales, furniture, purchases and salaries are all related to cash. All in these transactions cash were involved. So you have to now close this account. The cash account has to be balanced now. If you look at the debit side, left hand side, you can see it has 200,000, and if you look at furniture side, it has less than 200,000. So that means you have a debit balance now. You have a debit balance of cash, that is 132,500. After deducting all furniture, purchases and salary, the cash in your business, the balance of cash in your business is 132,500. So similarly, we keep on preparing for capital account. Only one transaction is there for capital account. Capital is introduced in the form of cash. So therefore, on the credit side of capital account, you have a balance of 100,000. No other transactions are recorded. So capital account, in capital account, we have credit balance of 100,000. So if you apply modern rule, capital usually have or normally have credit balance. So similarly, you are going to prepare ledger account for furniture. Furniture is asset account. It has a debit balance of 10,000. Next, you are going to prepare for purchases account. Purchases account is expenses account as per modern approach. Expenses normally will have debit balance. Next, we have sales account. Sales is a revenue account. Revenue account normal balance will be credit balance. So here we have 100,000 as credit balance. Then we have rent account. Rent is expenses account. So expenses usually will have debit balance. Here we have rent balance of 13,000. Then we have Abdoji's account. Abdoji is a creditor. It is on the liability side. So liabilities usually have credit balance. So we have credit balance of 7,000. Then we have salary account. Again, salary is expense account. Expenses usually have debit balance. So we have debit balance of 7,500. Finally, the last ledger is outstanding rent account. Outstanding rent account is a liability of the firm which he has to pay on the later date. Therefore, liability balances are credit balance. So balance of outstanding rent is nil term 13,000. Now all the ledgers and journal entries are prepared. Now this has to be posted into the trial balance. Now you are going to prepare trial balance for Tashi vegetable shop. So this is the trial balance of Tashi vegetable shop. Serial number, account head, debit, credit. Now I am showing two ledger accounts on the left and right hand side of this trial balance, and I am circling with the two different colors, one with red colors and other one with black colors. So let us focus on red color first. Cash account, debit balance. Cash account has a debit balance of 132,500, and then if you look at the trial balance, first item is cash, and in the debit column it is recorded 132,500. Likewise, you have sales account. Sales account balance is on credit side, nil term 100,000. And if you look at the trial balance, you can see sales 100,000. 100,000 is recorded on the credit side. After posting all the ledger account balances in trial balance, your total of the trial balance should be equal. Total of the trial balance should be always equal. So this is how we post from journal to ledger, from ledger to trial balance. Okay, now I am going to give you some tasks. We have learned how to post transaction, how to record transaction in the general journal. Then we have learned how to do posting from journal to ledger accounts, from ledger accounts to trial balance. Now this is the mixture of ledger accounts heads. It is here I have not segregated into debit and credit. What you have to do is you have to copy this one, all the accounts heads and all the amounts, and then prepare trial balance. Here you have to record cash in debit column, accounts payable in credit column. You have to use the accounting rule and then prepare trial balance. Consider all these are normal balances. All this account head has a normal balances. I repeat, students, today you copy this question and prepare trial balance. Thank you and see you in my next class.